folks, I'm Melly Little, and this is your daily TA wrap. But we take a look at these markets from a neoclassical perspective and ask ourselves what happened today. And it was a bunch today. And what does it tell us about tomorrow? I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, talking about a lot happening. You know, we've known that Thursday was going to be the day. We had the ECB decision, we had GDP, we had the Twitter IPO, all of those things culminating on this day. Market had been hanging at the highs for 2 to 3 weeks now. Each time there was an attempt to sell it off, not happening, right? Every time it came down, sellers disappear back the other way. Well, today it wasn't back the other way. It was continuation of the way. Last night I was looking at it. You know, they say the market will do the most, it will do the best to frustrate the most. And it definitely frustrated me because I was net short. I was looking for a retrace, looking to ride this thing back down and flip around and make some money on the downside as well. It's hard to time the downside. It's actually hard to time turns. You could feel it coming, but you just couldn't quite grasp it. Last night I think I even said that it looked to me like we were going to break this thing higher, and in fact they did look like they were going to break it higher, but it lasted all of about 10 minutes and we were back the other way. So let's look at the numbers and let's take a look at what happened and what we think is going to happen now as a result. Industrials 153 lower, 15,593, 594 roughly. S&P's 23 and a third lower, 1747. Folks, we're back easily under that 1760 area and heading back towards 1730. Composite 74.5 down, almost 2%, 38.57. This thing went into the gap and filled it today. NDX 63, almost 64 lower, almost 2%, 33.21.50. It's at the gap. And the Russell 19.5 lower, 1079, back under that 11,000, under there decisively at this point. Had an ABC structure on the way down, already finished it all in one fatal swoop. We had the ECB decision come out. They cut the rates half, 50% basically, went from 0.50 to 0.25. It was kind of priced in, but not really. We saw a nice big spike on the open, actually pre-market. 6:30 when that was about 6 o'clock my time, Mountain Time. It was 8 o'clock Eastern Time when the ECB decision came out. We got a big spike up on the futures. Then the GDP number followed. That was stronger than expected. "Quote unquote" taper talk thoughts, and that led to the market, drifting a little bit lower. And then market opens, we spike up. And you can see that here in the charts. We spike up. We started higher. You can tell by the candle. The open was up here, right? Then you got a little bit of push up, and then they just gave it up the rest of the day. We pop to a different chart, pull it to a 1 day. We'll put it on not 5 days, but 5 minutes. And you can see what I'm talking about. So you get the little spike up to start with, and then boom, they hit this thing, and they hit it all day long, all the way down. We've known for a while that this ship was pretty much loaded on one side. We've talked about that, the sentiment. I talked about it, I think, last night or the night before. But it doesn't matter until it does, right? And everybody hits the exits, and that's what happened today. So, the real question at this point, okay, is what is it going to do now? And if we look at this, you got a swing point high here. It's going to come back into the swing point high. That's what it's going to try to do. That's the retest regen. You had volume picking up today. You can see it down here, volume picking up. Compare it to the volume down in that area, it's about the same. You're heading back down there, you're about halfway there already. That's the S&P. If we move over and look at the Dow Jones, now remember the Dow Jones had actually taken and pushed higher. Oops, I didn't get the Dow. Let's try that again. Didn't print. Here we go. I guess it was just taking its time. Okay, so the Dow Jones had actually pushed higher. Remember the swing point high here? Got over it. You can see that here on this arrow. That's a suspect breakout. So what does it do? Well, it's going to come back immediately and do a retest regen on this bar. And that means you can go all the way to the bottom of the bar. I suspect that's exactly what it's going to do. That's where the next support level is. So the Dow, you have to think it's trying to come back into this area. So that's the Dow. If we go now to what had been the strongest, have been the weakest lately, as we were seeing rotation out of the tech stocks, the more risky stocks. We were talking about that the last couple of days. They were moving in the XLP and elsewhere. And that is the NASDAQ, the Russell, and so forth. At a gap area right here, we closed it today. We went into it, underneath it. That tells you it's probably going to try to get back to the swing point high. That's back down in this area. So that's the target again, just like the others. It's broken, heading that way, volume expanding. Now, this swing point doesn't have that much volume, so we're going to have to watch that carefully as it gets back into it. But you've been, at this point, you've been over, this area now, for a good, what is this at this point? It looks like about 15, 20 days, 20 bars. 6 bars on the way back. Remember, we've talked about this before. It's almost a blind buy when it comes back after 6 bars and into a swing point retest regen situation. And that's what all these are doing. I expect that, now when I say a blind buy, that doesn't mean it's going to reverse and necessarily go right back to where it came from. What I'm saying is that more than likely the first time back to those areas, you're going to see buyers show up. And I don't think this time will probably be any different. The only time I see that fail usually is when you have a situation where the volume coming back is so huge it just blows right past them all. Here's the NDX. Now remember, the NDX was in this little area and we talked about it ad infinitum, right? That area was the one that was holding. I told members I think a couple days ago that that Fed bar that was in there, that was the main bar. I think I even talked about it here. That bar was controlling the action, and when this thing broke topside or downside, that was going to be what really led to some juice. When this broke, that's in fact what happened. This one's coming right back into the gap area first. You may see a little bounce first, may set up some sort of an ABCD structure to get lower, but this one, just as the other ones, probably wants to come back to the retest regen zone. So that's, in all cases, we're about halfway there already, just off the one move today. And the last and not least is the Russell. Now the Russell has been the weakest of late. And Russell actually was setting up an ABCD structure on the way down. And that ABCD structure even completed today, didn't even wait. So let's take a look at it. And you can kind of see here, you had an A point here, the B there, and now down to the C, and actually the C was there and the D point was here. It's already finished it. So the ABCD structure is already taken place. So what's the Russell going to do? Well, it's into the retest regen, and it had already been there once before. That was in this area right here. So now at this point, we're underneath it. What's it going to do? It's going to come into the next area, and that's the support zone that's down here at the bottom of this bar. And that's the bottom. That's a full retest regen. Although the retest has already taken place, you're going to have to think that support area is where it's trying to go now. In all cases, if you didn't notice, let me point it out, volume expanded. Not tremendously, but there was an expansion in volume. And that is the sort of thing you would expect as you come off the top. And as a matter of fact, if we go back, because the SPX and the Dow were at the tops, the other two weren't. This is what I call volume off the top, right? So when you see volume coming off like this, it can actually mean something more serious, right? You are at the tops and the volume expands as you come off, right? That's volume off the top. That usually leads to a fairly decent, fast move. You broke a swing point low as well. You had a swing point low here. So I would think that these things get into this area fairly fast. We got employment numbers tomorrow. Those employment numbers may tell us more in the sense that if they come in, you know, at this point it's all taper, right? So if those employment numbers come in stronger in the morning, you're going to see the markets just continue on down. They're probably not even going to take a break. All right, let's go to the sectors, because the sectors, you know, remember we've had mixed signals on the indexes, right? Russell strong, then the Russell was the weakest one, and then the Dow makes the new high, breaks out yesterday, so it's mixed signals all over the board. The sectors have been holding up. I mean, for the most part, they haven't been giving it up. But tonight, you're going to see most of these started to give it up. So we're seeing volume off the top here, IYT, right? Nothing big, but volume expanding. And just like the rest of them, where's it going to go? Well, it's going to try to come right back into the retest regen zone. And if you look at all these, they're all going to be pretty much the same thing. They're all going to try to come back in and do their retest regens. Now, some of them are already low enough to where that's not going to be the case. For example, the SMH. Notice the volume pickup here on this. That's the second time this has done this. I would think that as a result of this one, this is going to actually end up deeper. So when you get volume off the top like that, and not so much volume off the top, but when you get two bars, right, with huge volume spikes on the result, right, you're probably going to come deeper. In this case, you got three swing point lows all lined up. It will be interesting to see if this area, this support area, holds it or not. If it doesn't hold it, it's going to be kind of a serious problem, because a break of three swing points is going to create some serious downdraft. And this is a big part of the NDX, so that will be what I'm watching there. XLB, nothing, you know, as we get into the actual X's here, it's back into support. You'd already had a retest regen, it's been doing it for like a week. So now you get a nice wide price spread bar, volume expanding a little bit, nothing big. It's going to come into this bar first. September 20th, I would think that's the area. It's coming in there in the morning. We'll see if it bounces or not. More than likely, it's going to get deeper. It's probably going to come all the way back to the next support zone. XLE, now this one had some volume off the top. This one has hung and hung and hung. And every time it tries to come down, it comes back up. Well, they got some serious volume today as they push back into that swing point high. That's not going to hold. We're coming down to the next one. Next one over here, I would think you get into that one. XLF, one of the weakest ones for quite a while now. Really has an ABCD structure down. You can see it, I think you can see it here on the chart. So your A point, well, you actually had two of them already. So the A point on this particular leg was here. So you had an A there, a B back up to here actually, and a C down. It only measures about another 8 cents on this particular index, so, or sector. Where's it going to go after that? Well, I think it's coming after the swing point high. That's the retest regen on this time frame. We'd already had the retest here. It had already been taking place. We're at the bottom of it now. I don't think it's going to hold. The next zone is this one, somewhere in there. Let's see here, XLI. Now, XLI, IYT, those two were refusing to do anything on the downside. We saw the IYT come off, volume expand. We're seeing it here on the XLI as well. So the industrial sector coming back. Where's it going to come? Swing point high, retest regen, same idea. XLK, volume expands off of this one and expands in a big way. Remember we had the Twitter today. Twitter was up like 70% today, some ridiculous number. They priced that originally at 17, right? 17. Then it went to 25. Then it was 27. This morning you saw it was up around 40, then 45. Then it actually hit 50, closes around 45, up 73, up 73%, up $19 on a $25 ask price to start the day, or where they expected it to open. That was the pricing. What can I say? It doesn't mean anything. Facebook didn't do the same thing, but Facebook was up big and then sold off. So I expect that, the hype will last for a little while. They'll push out some more shares, and then you'll see it come back down. But volume here, not that big. Comes off the top, a little bit of volume in the support zone. I don't know if this one will get all the way back. If it breaks the swing point low, we'll come back and do the retest regen. XLP, XLU, those were where the money was moving the last couple of days to a week. Actually got a push higher last night, and they gave it all up today. Volume expands a little bit. Retest regen. Still hasn't done it. Looks to me like it's going to come back and do it now. At least I think it hasn't. 41.84. Yeah. Yeah, it never got back. So that's the area. Same area. Retest regen. XLU really didn't do much today. Held up better than most of them. The XLV actually came off a little bit. I don't see anything major on this chart either. The one that it's a wide price spread coming back to retest regen, and the XLY. Now this one actually came off with some volume expansion, and we were talking about this last night. My opinion is, the market trades on the future, and if you're trying to buy something like this, thinking that the retail numbers, that because it's Christmas season, well, somebody's already bought that, and this run up was a result of that. Coming back to a retest regen, doing a lot of volume. I don't know if it's going to hold. We'll see. So when I look at all the sectors, some of them are a little bit worse than others. Most of them want to come back and do the retest regens, just like the indexes finally. These markets are finally seeing some transitions. And what I mean by that is you've already seen some swing point lows broken. That means you go to, on the short-term time frame. We're a long way away from the intermediate term time frames, which are going to be down in this area. Matter of fact, we can pull this over and for on the XLY, you can see it's way back here at this point. So, and that's true if we flip back over to the SPX and stuff. The structure is there, but we're so far away from it that it probably just doesn't matter yet. Now, if we get close enough, then we can think about it. But I'm pulling up the SPX again. Here's your swing point low. That price point's 1627. I mean, we're still trading, at 1740. So we're talking 120 points away. That would be a heck of a decline just to get there. So I don't think that any of that's in danger. The first thing is swing point highs here, 1729, 1730 roughly, and then there's swing point highs over here, which is 1709. Those will be the areas on the way back. All right, let me look at the ox markets because I didn't get a chance to look at these. I don't think anything major happened. It was interesting when the ECB did their decision. Gold, had a big swing, but it was basically even. It didn't even trade down. It was later in the day that gold began to trade down, and I'm trying to find it here. We've been talking about this thing wants to test I think it was the 918 bar. Yeah, this big bar, the 918 bar, still looks like it wants to test it. But on a day like today, down $10 or so, it's not a big deal. It actually held up pretty well. Silver probably looks the same. Let's see. But I think you're going to get a test of that area, and then we'll see if it can hold or not. Yeah, it looks the same. Let me go look at bonds. So what did bonds do? Bonds were trying to come back. Did people flock to these today because of the market selling off? That's usually what happens. It kind of looks like that's what happened here. Not much volume. This looks to me like yeah, it can bounce a little bit more, but you're probably going to set up a larger ABCD structure to get you down into this bottom. 102.98. All right, dollar. I know the dollar was up huge and then sold back down, so it probably left an ugly candle. And it did. Well, but the volume was there. So volume over here. All right, so remember when we started this move higher, we came in to do a retest regen here and just blew it away, right? Didn't even think about it. That told you there was more strength here, right? So now we actually have gotten over the swing point highs, 2 of them, as a matter of fact. Even though there's a lot of sellers in this still, we're coming into another swing point low at this point. The first time to retest regen off of it, 2182 to 2188. We got up to 2189, closed at 2178. We did more volume. So what does that tell you? That tells you, or at least it tells me, is that we're probably going to hang here now and go right back after it again, try to get over it. And I suspect we're going to attack this high, 2191. And I doubt it takes very long. So this is actually an ABCD structure on the way up. 2132. It's roughly 45 points. That takes you to 2110, which is clearly over this. And that high is 2210, and the high is 2206. Yeah, that looks like that looks to me like it's going to try to attack. Well, first of all, it's got to get over this, right? Here's your swing point highs you just broke, but it looks like it's going to try to attack this region up here. That's still a fairly good move if in fact it does it. And if it does it, that's going to put even more pressure on gold. And it will be a chore for gold probably to hang on to that bar we were just looking at. Let me see what the FXE looks like. Does it tell the same picture? Well, yeah, I think it does. So it's coming into this low, right? Got almost to it. The volume, no comparison, right? Yeah, it turned around, it bounced, but we've broken now. We have an ABC structure down. You know, that structure measures from all the way up here back up and down, right? And let me get the numbers on that. So that's 136.71. Well, actually, to here, that's about $3. Takes you about to 130. Yeah, that it does tell the same story. So 130 gets us all the way back into to this zone back down here, right? Down into this area. That's a pretty good move. And that's where the swing point is here on an intermediate term time frame. Yeah, I would be careful with the metals, given the way this stuff is set up. Okay, let me see what kind of questions you guys have. What little time I got left here. So let me first check my email, in fact, and my text, and see if anyone has shot me anything there. And I don't see anything there. And over on my text, nothing there. Okay, so what do you got up here? Spring Moon says, is it a good time to find stocks to short? Well, as I just explained, as we were going over the markets, we're about probably halfway to where we're going. So if the structure sets up, we can hypothesize here. But if the structure sets up, and I'll just use the SPX and bring this back in to look at it. If you get a setup where, this comes off and now bounces back up to this area, right? Then you have a decent shot at an ABCD structure that takes you back into the swing point high, right? Then you don't have much risk and you can make the short. If this thing just drives straight down, well, there's not a lot you can do about it, right? Unless you want to, you have to take too much risk. So it's really because again, if taking all this off and just, using, say, using something that we can measure, from here to here, if it pops back up to there, then you don't have to risk that much, right? You can risk new highs, right? And that way you have a high probability that you're going to win on the trade, because that's what you're really after. The target's down here, right? So if this thing just continues straight lower, there's really not a lot you can do about it, because at this point you've got to risk too much for what you're going to gain, because you don't think you're going to gain but to here. So now if you want to go to individual stocks, it's a little different ball game, because there you can actually get more bang for the buck. I don't know if you have some individuals in mind, but that would be, individual stocks are going to move more, right? Index is going to move another 1.5%. Individual stocks, they can move another 5%, and so you have a bigger shot there. The dollar hit the commodity stock today, but based on what you said, it should hit them again. If so, avoid a CLF, which had a nice breakout. I think the thing is if you had a breakout today, that's telling you have a stock that's strong, right? I don't know if they had news associated with them or what, but if you got a breakout today and CLF, well, you mean it had a breakout previously? Okay, I see what you're saying. Well, yeah, I mean, I would wait. I would try to pick it up. Why pick it up here when there's a good shot? You can pick it up right there in that support zone, right? That's where these two converge, right there. This bottom and this top, right? So yeah, wait, let it come back into there, and then not only do you have a better chance of buying it there, you actually have the opportunity to see how it comes back there. What if it comes back into here and volume's up here somewhere? Well, it's not nearly as appetizing if the volume's down here. So, you always want the most information. You want to try to buy at the best place. I would be looking in that area and just give it another day, 2, 3 days. See if it comes in there. Let the rest of the market come down to a point where it should bounce, right? All those things together give you a much better opportunity. The hardest thing to do is to be patient. For example, I wasn't patient enough. Enough mixed signals were still out there. I wasn't patient enough with my net short position. I gave it up. Well, today I paid the price for not keeping it. And, you're going to make some decisions that are not right, and that's the way it goes. The risk was becoming great because we'd been going sideways for 2.5, 3 weeks. And the risk just gets great. But as it turns out, it does exactly what we expected, 2, 3 days ago. And, you're not there to reap the rewards. And sometimes that's the way it goes. So, yeah, individual stocks I think you have a better chance on if you're going to do that. Didn't BO today. Breakout today. Oh, yeah, right. I saw that once I pulled it up. So, all right, so tomorrow you got employment numbers. You got all this taper talk starting to come back in because supposedly the economic numbers are strong now. You got the Fed speak that's kind of talking, taper stuff to some degree. Maybe they just don't want the market to just go straight up because they're not going to taper. and they want to bring it down a little bit. And so this is an opportunity to do that, and they being the Fed officials. You know, I mean, the market's been straight up all year, so to have it come down a little bit makes sense. The problem is always is that once something gets started, it may not be as easy to stop. And I don't expect we're anywhere near that, but you know, one of these days that's what's going to bite these guys. They're going to talk a good show, and it's going to go a lot farther than they think it is. But that's for another day. For now, it looks like a normal correction finally taking place after 2.5, 3 weeks. All right, folks. Appreciate you being there. Tell a friend, tell two. I'm L.A. Little. This is and was your daily TA wrap. Have a great night, a safe, profitable day tomorrow, hopefully, and I will see you on Sunday.